Very good morning, and it's great to be back with you again for one of my Malcolm Graham Wood CEO interviews. And I'm really pleased to be able to welcome Paul Welch, who is the CEO of SDX Energy.
Thank you. Great to be here.
Nice to see you again, Paul. And congratulations on today's announcements.
Thank you very much. We're very happy to be here.
Oh yeah, I bet you are. Yeah, and maybe the best bet is to start us off by telling us what you've done, why you've done it, and how you've done it.
Okay, so what we've done is we essentially acquired Circle Oil's Egyptian and Moroccan assets from a pre-packed bankruptcy process. So they were in some significant financial hurt. Essentially, they've gone through a strategic review. As a result of that strategic review, we've picked up these two assets. So essentially, what we've picked up are 40% of the Northwest Gemsa field in Egypt, and then their Moroccan gas business.
Brilliant. So let's divide that up into two. Let's talk about Egypt first, and then Morocco. So let's run through where you've.
Okay, so in Egypt, we picked up 40% of the Northwest Gemsa field. That's a field that we currently have 10% of. So post-transaction, we'll wind up with 50% of that field, so half of it. It's a field that we've been involved in since 2008. It's producing about 6,000 barrels a day. Fully developed, a very mature field, but it's a significant cash generator. So it throws off $8 million in free cash flow per annum net to the Circle interest. So it's a great acquisition for us there. And it's also one that we can pick up without adding any people, any staff. So all that cash just drops straight to the bottom line,
Excellent.
which is important.
Yeah.
The other thing we picked up was their Moroccan gas business, which is a relatively small business. It's making 6 million cubic feet a day, of which 4.5 is net to Circle's interest. But the interesting thing is that they own the entire pipeline. So they own the pipeline from the basin to the sales point. They own 75% of that. So you have a tremendous amount of expansion because that pipeline is only carrying 6 million cubic feet a day, when in reality it can transport 24. So we see a lot of potential growth there. And the great thing about this, Malcolm, you're going to love, is that we can produce gas for $1 an MCF, and it's being sold for $9.90.
Yeah.
So it's a fantastic cash generator. And there, the Circle asset generates $13 million of free cash flow in 2017. So between the two, we're generating $21 million in free cash flow in 2017 from this acquisition.
Yeah. Now we're going to come back to debt in a minute, but the way you're excited about it makes me think, why didn't Circle do this themselves? I mean, and particularly with those Moroccan assets, where there's lots of assets doing nothing there.
Right. I think in the case of Circle, they were really cash constrained due to the debt position they were in. I think, as your viewers are aware, they had some exposure to a Tunisian exploration well that didn't go well, and they ended up spending more money than they had anticipated. They drew down their debt line, and essentially they wound up with $77.5 million in debt, and we're paying $30 million for the assets, so we're roughly paying 39 cents on the dollar. It was just one of those things where they drew the debt down, the oil price dropped, the debt was then redetermined because it was an RBL, and they were essentially caught out. And then Susie and Mitch and the team have been essentially scrambling to try to right the ship. And again, this is probably the last step in the process.
Yeah. So on that debt front, let's just sort of isolate it, because you paid 39 cents in the dollar to both the debt providers, or one's the World
There was
Bank.
an unsecured debt holder, and then there was a secured debt holder, and we paid that to the secured debt holders, which was essentially the IFC and 2B lenders.
Yeah. So once you've done that, you've got yourself a deal, and you're paying $30 million overall. Is that right?
That's correct. Yes, we're paying $30 million for the assets. Yeah.
That's quite a smart deal, particularly since you're taking, what do you say, 6 or 7 million against of cash and so on.
It's a good deal, but again, it was one of those things that took a long time to pull together. I think what really caused some people obviously we weren't the only people in the process. I think what caused a lot of people some concern was that there was a significant amount of Egyptian receivables, net about $16 million. And that kind of put a lot of people off because, as some people have heard, it's tough to get paid in Egypt. And as we've discussed on our prior discussion here, we've managed to get paid the entire time.
Yeah.
And that's because we take a combination of Egyptian pounds and US dollars. The issue for Circle was because the debt holders wanted to get paid, they were essentially cash sweeping the company each month, and they would only take hard currency, which was US dollars. The authority couldn't pay them all that they were due. So Circle was producing about $2 million a month in barrels and receiving about $1 million a month in cash in US dollars, and that was all that the Egyptian authorities had in US dollars available to them. and so they were paying that back, but then that receivable kept creeping up over time.
Yeah. So, I mean, it's interesting because, you know, you've been quite rightly lauded for being able to, in your own business, to get dollars and pounds out of Egypt, but you're now going to be faced with quite a big receivable amount.
Yep.
That's something which clearly you think you can sort of work through the system in the fullness of time.
It couldn't happen at a better time. And the reason for that is that we're drilling this really exciting exploration well called South Tasuk, and that well is going to spud at the end of February. So right when we need a lot of pounds and a lot of dollars, we're going to receive a big chunk.
I thought you were carried on South Tasuk.
We're carried for a portion of it, but we're carried. But again, even though we're carried, we have to front a lot of that cost, and our partner pays us back. So again, they came at the right time.
Perfect.
So for us, because we have businesses that consume pounds, you know, that receivable for us is easier to monetize, right?
Well, we'll come back to the South Tasuk in a minute because I'm very excited by it, as I'm sure you are. But I just want to finish off on the funding side.
Yeah.
You've got cash in the balance sheet at the moment.
Yeah.
You've done a highly successful placing, and the balance sheet will therefore look pretty impressive as a result afterwards.
Yes, we will. So at the moment, we have no debt. We have $9.6 million of working cap. Post-transaction, we'll have about $27 million in working cap. Again, no debt. And the cash level will be about $7 to $8 million. So we're in relatively good shape from a financial perspective post-deal.
Indeed, and my spies tell me that the placing has gone extraordinarily well.
You have some good spies.
But also because when you came in here before, and you told us when you started this process of SDX and you raised the money and so on, is that your shareholders were supportive and knew that this sort of day would come along. So, you know, in terms of that, I mean, I'd probably jump a question from there because of that process. You know, you're going to take a little while to digest, but by the sounds of it, with the assets that you picked up, you'll be able to kick on and do things with the extra money.
True, yeah.
And the assets, and we might hear more from you.
I think you're right. I mean, again, for us, we'll digest this one. Again, because of the state of the business, there are still opportunities out there. And again, when we started this journey, back in May of last year, we listed on AIM. We picked up some very good institutional shareholders. We told them at the time, we see opportunities out there, and so, you know, please don't be surprised, you know, when we come back with something. And they're like, look, we're not going to be surprised. We're supportive of this. Find accretive deals and bring them to us, and we'll fund them, and that's what happened here. So, again, if we find something else that's as attractive as this, we will definitely bring it forward. Yeah. Again, we're coming out of a tough period, and so, you know, some people have managed it well, other people are still struggling, so we still think there are opportunities out there. So, yeah, we're going to continue to look, but we think with what we have at the moment, we have the ability to significantly grow from where we are presently. Yeah.
And beforehand, you're pretty much only in Egypt. Yeah. You've now obviously expanded that in Morocco. Yeah. Does that mean that the whole of North Africa is up for grabs if you saw something?
Yeah, I think for us, it's a big E on Egypt because there's so much there and we understand it so well. Morocco, we've always liked. Again, as probably your viewers know, I used to run a company called Chariot, and we went into Morocco at that point. So we like Morocco, and then I guess the other part of North Africa that we would probably get involved in would be Tunisia. You know, for us, that's North Africa. It would be Morocco, Tunisia, and Egypt, with a big emphasis on the E in Egypt because we see a lot of opportunity there.
Some people would say that Egypt is a political problem. You don't see it like that, do you?
No, we don't. I mean, again, you know, no place is perfect. I mean, even my own country has some unique leaders at the moment. So I would say that no place is immune to that. But from our perspective, with the change in administration, what we've seen in Egypt, things have stabilized. There's a new IMF package that has essentially supported the currency. They've forced them to make some changes. So we see the political climate and the business climate in Egypt improving from here, and has improved significantly from where we were, say, a couple of years ago. So for us, we're very comfortable there. We've been through 3 administrations. We've managed to get paid and do our business. So we're comfortable working in Egypt. We understand it. We like it. We have a good team in place there. So we're going to continue to work there.
Yeah. While we're on Egypt, I said I wanted to come back to South Tasuk because it looks very exciting. And since you were last in here, it's turned into, you know, a more exciting prospect.
Yeah, it has,
the 3D gave you some much more exciting things to look at, and of course there are 2 things that happened. First of all, you're about to spud a carried well, and secondly, you were talking about, you know, everyone was suddenly descending on you wanting to farm into the project. So Tell us about South Sea.
I'll talk about the first part. I don't know about the second so much. Okay, so with regard to the prospect itself, as we said, we originally got involved in it as an Abu Madi gas play, which we see. So we have a 300 to 400 BCF prospect that we're going to drill, called the SD1 well. We're going to spud that towards the end of February. And the original target was about a 7,300 foot TD well, a nice big gas prospect, 50, 60 million barrels equivalent, so fantastic. But then after we shot the 3D, a guy in our team, Cameron Snow, the VP of Subsurface, who had come from Apache, recognized that below the Abu Madi, the AEB and the Abu Roash appeared to be in closure, and then they also appeared to be oil bearing, right?
Yeah.
So sourced from a cooler oil source. So we have 3 horizons that we believe are in closure and are potentially oil bearing. So now we're going to take the well from 7,300 feet down to 10.3.
Right.
And as you mentioned up front, Mike Carey. Okay, Mike Carey's good for $3 million, and the
Right.
well cost is going to exceed that. So I'm going to be up for my proportional share of the remainder, which
Yeah.
is probably close to $1 million. But we're going to drill that because we have upwards of 100 million barrels of potential beneath the gas horizon.
Yeah.
And as you point out, we've been approached by some rather large companies to farm in, which we haven't done. We haven't
Yeah,
done because,
yeah.
again, we're 55%. We're the operator. We're in relatively good shape now, and we're going to go ahead and drill it ourselves. Our partner may take a farm out, but at the moment, we're going to
Right.
drill it 55%.
And that is due to spud this quarter.
End of Feb at the moment.
End of
So
Feb.
location construction has started.
Yeah.
It started on Sunday. That'll take about a month, and then we'll spud after that.
And given the depth, it's going to be, what,
It's about a
60 days?
28-day well.
28-day well,
Yeah, a
all
month.
in,
It'll take about a month.
even when you get to the oil. That's great news.
Yeah.
So just looking at I'm looking at the upside, the exploration potential for the combined entity, the combined group now.
Right.
You'll still have, you'll have some your production and the South Suzuka's a potential, lots of upside. Where do you see the exploration upside there?
So again, post-transaction, if we just talk about the metrics, we're going to be producing about 4,700 barrels a day of oil. We're going to have 12 million barrels of 2P reserves, and we're going to have about 100 million barrels of essentially resources out there that identified through a very rigorous NI 5101 Canadian process. The exploration upside we see is both in South Tassouk, in Egypt, and then also in Morocco, because in Morocco we're not only picking up the Cebu permit, which is the production permit, but we're picking up the Lala Mamouna exploration permits as well, that already have 3D. We've already identified 5 amplitude-supported prospects. So straight away we can drill those and essentially allow us to almost triple the reserve base that we have in Morocco presently. So we have exploration opportunities on essentially both sides of the continent in that
And
sense.
do you have commitment wells in Morocco at all?
We do have 2 commitment wells. Again, those commitment wells are at the moment tied up or teed up to be drilled in the 3rd quarter of 2017, so this year. We may drill those slightly earlier, and we may drill them as part of a bigger program. It will depend on how things work there, because unlike Egypt, where you have a vast amount of infrastructure and rigs and people, Morocco is still relatively new in an E&P perspective, and so you have to mob things in. So it typically makes more sense to bring it in for a longer program.
But it's good to have the pipeline.
Definitely.
And of course, the Gulf Sand stuff is adjacent, is it not?
It is. It is there. Yeah. But apparently it's open now, so it's no longer there.
Before we close, there are 2 things I want to ask you to mention. First of all, how you got on with the Circle people during this whole process, and then after that, maybe you could just give me a minute or so your vision for the totality now that you've done the sort of dream deal for the time being. I know there's more to come,
Right.
But how's it look?
Okay, again, if we talk about the Circle staff, so I think Mitch Flegg and Susie Pryor, the people we've dealt with the most, there's also another fantastic bunch of technical people as well that we've dealt with. They've had a very challenging year, if not 18 months, and they've come through it strong. They've been very helpful. I think that they ended up getting a good deal for the debt holder in the end, because the shareholders essentially received, unfortunately, nothing. But I'd like to say thanks to them. They did a fantastic job. Our vision for SDX is to continue to grow, both organically and inorganically. So our organic opportunities are ahead of us here. Something like South Tassouk works. We're talking about production, 25, 30,000 BOD per day. In the case of Morocco, we're currently producing 6 million cubic feet of gas through that pipeline. That pipeline capacity is 24 million. So we have the ability to 4x that and increase it by 4-fold. So we see those as our 2 biggest opportunities at the moment. But as I said earlier on, there are still opportunities out there, particularly in Egypt, for us to grow inorganically. So we're going to continue to grow those. So our vision is to get the company up to 25 to 30,000 barrels a day. That's where we're headed. This is the first of hopefully several transactions, both on the organic and inorganic side, to get us there. But we think we're headed in the right direction, and we're pretty excited about it. And we're very happy to finally get this deal done.
I'm sure you are. And many congratulations on doing the deal, on the oversubscription, and the fact that you've put it all together. It's taken a long time, but I'm sure your shareholders will be absolutely delighted. I'm sure it won't be long before the new bucket list is out, so you never know you're out there.
I live for that day.
Paul Welch, CEO of SDX Energy, it's been a great pleasure for me to talk to you today, and we look forward to seeing you again soon. And congratulations again on what is a great deal.
Thank you very much. Appreciate it.
Pleasure.